Hi everyone, the crypto market has been a total roller coaster lately. Wave after wave of market shocks catching everyone off guard. The crash on February 3rd was especially brutal. The entire market sentiment just collapsed. Bitcoin briefly dropped below 90,000. Ethereum fell to around 2,300 and a staggering 700,000 people were liquidated. That's a lot of investors getting liquidated, with total liquidation amounts reaching a record of $2.04 billion. Panic was definitely in the air. At the time, I posted an analysis of the price chart on Twitter, and as it turns out, my prediction was pretty spot on. What's even better is that one of my followers used that analysis to successfully buy the dip. So that was really great to see. But yeah, what actually caused this massive crash? That's the problem. That's the question. Will prices keep dropping? And most importantly, how can we manage risk and position sizing properly in this market? Let's dive in. So, first, what happened? We've all been predicting that 2025 would be a bull market. But who would have thought that right at the peak of Chinese New Year, the crypto market would be riding a roller coaster, shooting up and crashing down, with liquidations piling up everywhere, absolute carnage. But don't panic. A bull market doesn't mean prices will just steadily go up without corrections. It's normal. Short-term volatility doesn't change the long-term bull market trend. This drop wasn't just a regular market cycle adjustment though. It was also triggered by several macro factors. So let's talk about them. The first macro factor was the global shockwave from DeepSeek. This event shook up every industry, tech, finance, and even our daily lives. We all know that when it comes to AI, OpenAI has always been the undisputed leader. ChatGPT is the most widely used and well-known AI application in the world. Sure, big tech companies like Google and Baidu have launched their own AI products, but let's be real. None of them have come close to shaking ChatGPT's dominance. It's kind of like Bitcoin in the crypto world. Nothing has really challenged its position at the top. But then, out of nowhere, DeepSeek exploded and sent shockwaves through the global market. No hype, no big marketing campaigns. This app was barely on anyone's radar. Even its parent company, DeepSeek, wasn't a household name. It's nowhere as big as Baidu, TikTok, or Tencent in China. I've never heard of them before. What about you? And yet, this small company launched an AI app that not only overtook ChatGPT to become the first app on the US App Store, but also triggered a massive sell-off in US tech stocks. Nvidia's stock even plunged 17% at one point. And not only that, DeepSeek even went open source. Just like Bitcoin, it's open source. Open source, what does it mean? It means anyone can download its large model. Anyone can develop on it, contribute, or modify its features. It means decentralization. And honestly, I love this aspect. I've always been a strong advocate for decentralization, So this whole battle between DeepSeek and OpenAI, who knows, maybe we can even call this a win for decentralization. And this is going to have a huge impact on the crypto space, I think. Think about it. Since its code is now open source, a ton of companies can instantly start researching AI-powered crypto applications. Things like AI-driven trading analysis, AI-generated NFTs, AI trading bots. I know you like these ones. I can't even imagine how fast this is all going to evolve. But that's a whole other topic. Let's not get into that for now. If you're interested, drop a comment and I'll make a full video about that. Back to the main point, the market shock from DeepSeek. It didn't just hit stocks, it hit crypto too. Bitcoin and Ethereum dropped 6 and 7%, and some smaller altcoins tanked double digits. Absolute carnage. Crypto and traditional stocks are becoming more and more correlated. Since crypto is still seen as a high-risk asset, whenever investors take a hit in the stock market, they panic sell crypto to hedge their losses. That's exactly why we saw prices crash in sync. This increasing market correlation makes crypto even more volatile during stock market turbulence. And for investors, that just means more risk and more uncertainty when making decisions. So this was the first macro factor. And then we have the second macro factor, US tariff hikes. A 25% tariff on imports from Canada and Mexico, a 10% tariff on imports from China. This policy, on top of the DeepSeek incident, was basically like throwing gasoline on a fire. Global financial markets went crazy. Tariffs have a huge impact because in the end, that extra cost gets passed down to every single consumer. You are not taxing a country, you are taxing your citizens. And that kicks off a whole chain reaction. You have higher tariffs, so higher cost of living for consumers. so less consumer spending, so lower corporate revenue, and layoffs or company closures. And then you have rising unemployment. So you have an economic slowdown, and the stock market drops, investment slows, and then the market confidence weakens. So the economy deteriorates even further. Maybe in middle to long term, it's good for developing, the economy inside the country. But here now, it's not good in the short term. Of course, this is the simplified version. The reality is a bit more complex. But one thing is clear. Raising tariffs fuels concerns about trade wars and economic recession. And when that happens, investors pull out of crypto, driving prices down. The good news? This trade war situation is already starting to ease up. That's great. The US, Mexico and Canada, they agreed to implement the tariff hikes for just 1 month while continuing negotiations. So we will need to keep a close eye on that. And then we had some interesting US economic data this week too. That's another thing. The latest economic data out of the US is all over the place. The service PMI came at 52.8, way below the expected 54.3, which is actually bullish for crypto. But then unemployment data came in at 183,000 jobs, exceeding expectations, which is bearish for crypto. But yesterday we got the non-agricultural jobs data. It was 143,000, a lot less than the expected 170,000. So we have bullish and bearish signals mixed together. No wonder the market is having a hard time figuring out what to do next. It's a total headache. Oh yeah, we also can talk about El Salvador, because beyond these macro policies, El Salvador also decided to cancel Bitcoin's legal tender status, which did shake up the market a bit. But honestly, I don't see that as a big deal. I actually made a whole video on El Salvador's Bitcoin experiment before, and I mentioned that Bitcoin isn't really suited to be legal tender at this stage. What we were really excited about was the government's attitude and support for Bitcoin, not just the legal status itself. El Salvador originally pushed Bitcoin as legal tender because of its unique economic situation. It was basically a two-way trade-off. They got what they needed from it. So there's no reason for them to cling to the title anymore. If you're interested in the full breakdown, go check out the video I did. It goes way more into the details. But yeah, no problem with that. So that's about it for the global market and for the situation we are in. But with all these big and small events happening at once, the market has turned into a complete mess. Things are getting really complicated and the future of crypto is looking more uncertain than ever. So what can we expect now? Let's do some analysis. First, in the short term. What is the short-term outlook? Right now, Bitcoin is still in the consolidation phase, basically a choppy mid-uptrend. But the market is being completely driven by news and sentiment, which means short-term price movements are still highly unpredictable. So for now, Bitcoin is still ranging, hovering between 92K and 107K, as long as we hold above the 92K support. In my opinion, there is no need to worry, but nothing is guaranteed. If Bitcoin drops below 92K, I think things could go really wrong. Things could get rough. If you're into short-term trading, pay close attention to recent policy developments. Positive news could trigger a rebound, while bearish news might extend the downtrend. And if you look at things long-term, like I said earlier, short-term volatility doesn't change the long-term bull market trend. We've got Trump's official backing, plus big players like CZ and MicroStrategy they changed their name. It's Strategy now. But these kinds of big players are providing strong support. Bitcoin is still in an uptrend for 2025, and I fully expect it to hit 200K this year. At the very least, we should see 130K get broken this year. So just stay patient, wait for pullbacks and position accordingly. If you're a long-term investor, now is a good time to observe the market and avoid making emotional decisions. Just observe the market. Go touch some grass, as we say in this market. That's what I'm doing. It's a bit hot, but that's what I'm doing. So let's talk about position management and risk control now. With the market on edge, solid position management and risk management becomes more important than ever. In critical moments, this is what protects your capital. Just look at how many people got wrecked, liquidated recently. I can bet at least 70% of them didn't have proper risk management strategy in place. So how to position yourself. The simplest and most effective approach is scaling in gradually. Never go all in at once. Instead, start by investing 20-30% of your capital, observe the market's movements, and add positions slowly over time. DCA, something like that. Also, never overexpose yourself. A good rule of thumb is to keep total exposure between 50 to 70% so you don't take massive losses if the market crashes. And don't put all your money in one single coin. Diversification is key. Of course, Bitcoin and Ethereum could make up to 70-80% of your portfolio, but the allocation to altcoins should be moderate. Don't go overboard. Too many high-risk bets can be a recipe for disaster. And about risk management, always set a stop loss. If your position drops 5 to 10%, cut losses immediately. Don't fall into the trap of waiting for a rebound, trying to catch the knife. You could end up losing even more. Be careful too with leverage. Sure, leverage. A lot of liquidations were leverage positions. I know high leverage can mean big profits, big potential, but it can also wipe you out overnight. In volatile markets, low or no leverage is the safest approach. Stick to spot trading and avoid unnecessary risks. That's the best way to do it. And of course, stay calm. Don't let market emotions control your decisions. When others FOMO, don't chase. When others panic, don't sell out of fear. A stable mindset is the real key to long-term profitability. Yeah, that's how to position yourself and do the risk management. And now, with AI disruptions, stock market drops, shifting macro policies, crypto volatility at an all-time high. In this environment, learning to manage emotions, allocate position wisely, and control risk effectively is more crucial than ever. Short-term, the market may stay choppy, but long-term, there are still plenty of opportunities in crypto. So avoid reckless moves, keep an eye on policies and macroeconomic trends, allocate funds wisely, and play the long game. That's the real winning strategy. No matter how the market moves, survival, not winning, is always the priority. Yeah, that's all for today. I hope it helps. Now go smash that like button, hit follow, add me to Telegram so your future self won't cringe about your last bull run FOMO trades, and I'll just see you in the next one. Merci et au revoir.